Good evening, everyone. Hello, welcome, guys. How is everyone doing today? Krishna said, hi, Theo. Hi, Krishna, how are you? Is everyone doing all right? Did you all have a nice weekend? Did you enjoy your Sunday? So, please let me know who is watching us for first time and where are you guys, everyone. That refers to everyone. Where are you guys watching us from? Ben said, Patty, you here? Yep, everybody's here. Jergo from Hungary, nice. Krishna said, yeah, good, recharge the batteries. Rocky from Malta, brilliant. Hannes from Denmark. Ken said, hi, Theo. Hi, Ken. Arhaf from Dubai. Oh, beautiful. Here, everyone is going crazy with that Dubai chocolate. It's like something they trying to put their hands everywhere to find that Dubai chocolate. Julien from Dubai, nice. Alessandro from Italy. Hugo said, hi, Theo. Hi, Hugo. Arbet said, I'm from UK. Asgar from Netherlands. Nice to have you on the webinar. Hassan from Palestine. So, oh my God, I see a lot of people here. I'm very thankful to see so many participants and also people that they are watching us for quite some time now. Admin Yemi from Dubai. Oh, what's going on with you guys from Dubai today? It's brilliant to have you on the call. Adam from Hungary. Hag from Glasgow. Norchiri from Nigeria. E.T. said, great to be here. Julia from Australia. Oh, can you see my glass? I brought it from Australia. Chris from Canada. Steve from Wales. And of course, everyone else. And guys, myself, the Elevating Forex team would like to welcome you to this webinar. The disclaimer, of course, just to make sure that everyone understands that this is for general information and for educational purposes only and not direct or indirect to give any personal or financial advice of how you're going to handle your money. And also the previous performance of an asset in trading doesn't necessarily mean that tomorrow similar asset or similar trading setup or identical trading setup, it's going to play out the way we want it to play out. So VS from the UK, nice. So for those who see me for first time here, by the way, you didn't tell me who is on this webinar for the very first time. I recognize so many names, by the way, that I know you guys are here for quite while. But Kay, IJ said first time, Arbet, first time, bro. Alessandro, first time. Nochi, first time here. Jerko, first time. Danielle, I'm here for first time. London, UK. Julia, first time. Wow. Welcome. So, boys, girls, ladies, gentlemen, my name is Theo. I'm originally from Greece. I'm a Greek Cypriot guy. I used to live in Australia for a decade. Now I came back. Now I'm in Cyprus for a while. I'm a real person. I'm not a bot or something. I'm who I am here. I have accounts in all social media. You can find me and check if I'm who I present to be. So just to make sure that you understand that it's a real person talking to you tonight. So as for my expertise in trading, First, I trade for the last 12 years now, and also I took some steps beyond trading, and I'm a certified financial technical analyst. I hold the certificate from the Society of Technical Analysis in the UK, as well another certificate from the International Federation of Technical Analysts. I specialized in CFDs products and futures primarily. That include currency trading, indices, commodities, cryptocurrencies, and when it comes to the currencies, we need to learn currency correlation in order to understand which currency pairs they can give high probability setups for our trading purposes. Okay, so just simple as it can be. So on a daily basis, beside my trading activity, I also deliver market analysis for hedge funds and for prop trading firms. I don't know if some of you are trading yourself as well, beside the signals you receive from our traders here at Elevating Forex. So, and I publish articles in financial magazines. You can find me there as well. And I also have some hundreds of videos on YouTube, me doing webinars with big names like John Bollinger on the left corner up here, or Steve Ninson in the middle. John Bollinger, if you heard about Bollinger Bands, it's the inventor of the Bollinger Bands. Steve Ninson here about the candlesticks. He wrote and he introduced the Western world about candlesticks. My good friend Alex Spiroglu, another Greek fella, he lives in the UK. Some people from the States, from the UK as well. And yeah, so it's pretty awesome. Awasis, do you trade prop firms? Of course I do. King said, hi, Theo. Ben, yep. Can I use the signals for prop firm? Adele, I can't get into this discussion right now about that. It's something that it's not relevant for the webinar. So by the way, here we start. I will answer that question a bit later. Okay, so let's just start. Let's keep rolling. First currency pair I would like to check for tonight, it's the euro against the US dollar. Okay, so for those who are first time on this webinar, just allow me to tell you that I use a specific approach in trading. So when it comes to the purpose of this webinar is to give you some insights about the market and to prepare you how can you take advantage while you are at home and you want to trade something yourself. By the way, if you are a total beginner and you have zero idea about trading and you need to learn and you want to learn, I have a course that I can teach you over some sessions. And just to let you know, because yesterday it was my birthday, yes, the real birthday, and all my coaching sessions now for the next 24 hours, I put them only for $50. Okay, usually it's $160 an hour. That's what I charge, but only for the next 24 hours, whoever is going to book private coaching with me, and you can do it through my website, this is going to be only for $50. Okay, that's it. I can send you coupons. Thank you for your wishes. I can send you the coupons to put it on the checkout. I can send you guides. If you need to know how, you can let me know and I will direct you. Okay. If you don't want to trade yourself, if you don't want to do anything, just it's all good. No problem. No hard feelings. And let's keep with the webinars. But if you need anything, please feel free to either contact me directly or ask the support and they will direct you to me. Okay, so just for the next 24 hours, my coaching sessions, 1 hour, it's only $50. So, and it's a limited amount of these coupons you can use. So just please understand that. Okay, so let's start with the euro against the US dollar. So the weekly chart had a kind of strong bearish candle, which means that next week, so from Monday onwards, we do expect the market to decline, even for a while. Now, understand that in trading, there is also the fundamental part. Do we need to know the fundamental part? No, we don't. But if we know what news they are in the market and how they can interpret in our trading, we can use this knowledge to understand, to, let's say, validate more our setups. Like on this one here, I like to use the weekly chart as the guideline. And by the way, I'm a day trader. I can teach you to trade on the 1 minute and 5 minute chart. But also there are people, they have 9 to 5 jobs. They cannot be in front of the screen all day long to day trade. So it's highly, highly recommended based on my experience, and this is how I started with trading, to look the weekly chart to understand the direction, and then you go down to the hourly or the 4-hour time frame and to find entries to capitalize on that move. Okay, very simple. It's something that I used to trade for years and years. I still trade that one beside the day trading, and it works pretty well. So if we assume that based on the weekly chart, the euro will drop next week, what we can see here is that the price makes this formation of lower highs and lower lows. Okay, so lower highs and lower lows defines a downtrend. In a downtrend, we want to be sellers. The best way to sell in a downtrend is to wait for green candles, bullish candles, okay, and then to find a kind of resistance area, then to see a bearish reversal price action, and to go for short. This is one of the best ways, high probability setups to do. Other way is to just place a sell limit order at this area of resistance using perhaps some Fibonacci retracement tools from up there, or just the support resistance themselves. You enter here, you put a stop loss above there, and you put a take profit down there. It's a favorable reward to risk, and it's worth taking this kind of setups. Okay, this is what we call them volume candles or long bearish Marubozu candles. And just from experience, I will tell you that these candles somewhere in the middle, they have the highest amount of volume. Therefore, all the algos, they are looking to re-enter the market somewhere in the middle. If you pay attention and you see these candles, how they perform on retracements or corrections, you will be amazed. Okay. Everyone, please, any questions you may have, feel free to put them on the chat below. Okay, don't hesitate. This webinar, it's for you. It's not for me. I want to give you as much as possible and equip you with pretty much all the knowledge you need to trade. To if you want to trade yourself, you can do it from these webinars. Okay, so feel free, ask anything you want to ask. There is no right and wrong answer question here. There is no good and bad question or smart and stupid question. In trading, everything is equal. All traders, they see the markets from their perspective, and there is no right and wrong thing. All right. Next one, Great British Pound against the US dollar. So this market, you can see it's in an uptrend. Price makes higher highs and higher lows. Last week, the non-farm payrolls, they forced the price to push lower, and we see this bearish engulfing candle. Now, what we can do here are two things. We have to first understand that the predominant direction, it's up. So if we want to trade on the hourly time frame or on the 4-hour time frame, we first need to decide which direction we will look to take trades. You need, before you go down to your lower time frame to trade, you need to know in which direction you're going to take the trade. I often, especially when we do one-on-one coaching with people, and I see traders, they go down, okay, the weekly chart doesn't make sense to me, all right. They go down to the hourly time frame, okay, this is down, but now I see a lot of bullish candles here. Maybe I will start buying. and they lack of, let's say, thinking structure when it comes to trading. What I would like you to understand here is when the market make a series of lower highs and lower lows, highest probability is that the market will continue make lower highs and lower lows unless an opposite force, it will change the market direction. Unless this happens, we keep looking for short positions. Now, if you are a little bit more into trading and you are trading for a while, you may know some kind of double bottom reversal formation and all this stuff, which they are very, very good to know and relevant. But regardless that, if we focus based on the weekly price action here and we say, okay, this has a high probability to push lower, the market to push lower, you can use, let's say, the hourly time frame and to see, okay, we have lower lows and lower highs here. Therefore, I'm going to wait for the price to come, let's say, somewhere a bit higher, somewhere maybe here, if you know what is an order block, maybe at this area here. I like to use the 50-period moving average just from direction. Yes, Buckingham, a Greek Cypriot guy. And we can wait for a price action reversal. By the way, usually in all the webinars, I ask people if they want to send them a couple of slides from my educational trading course that I put some details on specific candlestick patterns that I trade. And if you want to get them, just send me a message. Okay, either you can send me a message directly or you can send at Elevating Support and they can send you to me. So it's the same thing. You can ask me to send you the slides and I can do that for you. Because I like you to know the bullish and bearish engulfing. I like you to know the high and the candles with a long upper wick and a long lower wick. They are very high probability things to do. Okay. So bearish on the USD and bearish on the Great British Pound US dollar. Now we're gonna still look for short position unless the price breaks above this high here and it makes a new high. In that case, the lower low and lower high formation, it will end and most likely we're going to see a higher high and higher low formation. Okay, now what is the bit of a confusion in trading and how can you solve it? When the higher time frame is in a corrective phase or in a retracement like this one here, we do expect the price to move lower, and at some point, if the weekly time frame it's going to resume its uptrend, we're going to see some kind of reversal price action like this one here. But we're going to go through the price, it's going to go through a transition period. That transition period on the lower time frames, it's going to look like a sideways move. It's going to look like an accumulation move. It's going to look like with a lot of false breakout signals, and that's what makes the trader's life a bit difficult. So what I teach people to do is to wait, better to wait for the reversal price action on the weekly chart to show you that this trend now it's about to continue with the force of the weekly chart, and then to go down to the lower time frame to time the entries. This is the best way to trade, guys. Okay, trying to trade everything what's in there, or because you're going to hear everywhere say trade the major, trade the euro US dollar, trade the pound US dollar, trade only the Australian dollar, trade only this, trade only that. There are periods the markets go through it. There are transition periods in the market, and if we don't understand what to expect in this transition period, it's going to be hard to deal with the losing trade. Because if you experience a losing trade, let's say this one here, you are very convinced that the market is going to drop because you see this bearish candle. You go on the hourly time frame, and you see this bearish candle here. This is a bearish engulfing. And you start saying, okay, I'm going to take a short position here on this bearish engulfing. The market comes up to here, it finds a support, and it bounced off and move upwards, and it does these higher lows and higher highs here. And then you say, okay, maybe now that I'm going to buy. And the price comes somewhere there, and you are trying to buy. You buy here, the price goes there. Here it's a resistance. You are very emotional in your trade. You don't see the resistance, and you believe that there is nothing here. There is no obstacle. And the market here reverse and start moving downwards. And you are getting frustrated. And when you see the price right here, you are convinced, you know what? The market is going downwards, so I'm going to be ready to sell. And you are entering short here, and the price make a double bottom, and it start going upwards. And then you start removing stop loss from your trade. You start over risking. You start doing this is a scenario that it's very common among traders, and it's real. Okay, it happens all day long with many traders. And what I try to help you understand is, in order to avoid this, we call them the transition period. The price, after it got exhausted to come down here, if it's about to reverse, most of the times, not always, but most of the times, it requires a transition period before it's going to create an uptrend, for the accumulation phase to create it. Therefore, we need to understand, as either retail traders or home-based traders or prop firm traders, we have to understand what is our capabilities in order to protect our capital while trading. Trust me on that. There are accounts I trade with 4 and 5 figures on each one trade because of what I do anyway in the market. Not only personal account, but because I trade other people's account as well. So these things, to understand where is the resistance and where is the support, and what can I do within the boundaries of resistance and support, respectively. Resistance is there and support is down there. It's going to save you a lot of headaches. So I figure out, and that's how I teach you, the best way to sort this out and to increase the probabilities for high reward to risk and high probability setups is to look on the weekly chart and the direction of the weekly chart, as well as the price action on the weekly chart, to confirm each other, which means there is a good probability that in the lower time frame, the price will move towards that direction. Okay, any questions? I took a little bit of time to explain you this, but this is the number one thing you need to know in order to become, in my opinion, a profitable trader. Next one, let's check the Australian dollar. For our friends in Australia, against the US dollar. What I like in this one is that the price created a strong bearish engulfing reversal. Bearish engulfing reversal. If this bearish engulfing from a strong resistance, look at this resistance. If this bearish engulfing will play out, it means on the hourly time frame or any other time frame, we're gonna see, you see this downtrend that it's already in place. We will see the price to move lower. Now, I'm not gonna rush to sell here because we don't know what's going to happen here. But there is what I teach in my courses, the fair value price, which is the area from point A to point B. We have also this, what we call an inside resistance. You won't find it on anywhere, this one, because it's a very deep knowledge for us that we do technical analysis. And this one here, it's the key level of resistance, not up here, but it's down there. Often you're going to see the price comes here and then reverse, and you are wondering why just there, because there is a fundamental and a very well respected by the market this resistance here. Okay, so other ways that I like to use, it's the Fibonacci retracement tool. I keep it simple. I just use the 61.8%, which this one here, if you want, let's do it like this. So I don't like the 50% anyway. So I want the 61.8% and the inside resistance to be in a very similar place. So if the price reach this level here, I will be waiting for a reversal price action to go short. Simple as that. Okay, so pretty much bearish on the Australian dollar, US dollar, unless the price will penetrate this high here and it's going to make a new high, and we're going to start looking for long positions over there. Any questions, please let me know. I think I can take a sip of water, yeah? Or a coffee. Greek Cypriots, we just drink coffee on every occasion. Sometimes people say, how can you drink a coffee at 10 p.m. and then go to sleep? Well, it can. So I see a lot of questions. Just allow me to answer. Chris, working full time, how it's about the copy trading now? About the copy trading, guys, please send a message at support and Gills will let you know. I don't know, to be honest with you. Alessandro said, shall we expect for a retracement or a big bearish candle of the big bearish candle for Friday? Usually, yes. Usually the future markets and the forex market, they do good retracements compared to the stock market. So yes, usually we can wait for a retracement unless the market will break this low here and it will continue moving lower. But guarantee at some point the price, as much low as it's going to go, it's going to come up to fill up and get into the middle of this bearish candle. Market always do that. Notary said, I can see the market are all on the same rate. How do you trade on this situation? Wait for it to reach a break point before we trade. Sorry, what do you mean? The market are all on the same rate. You mean they have similar setups? If that's what you mean, it's because they traded against the US dollar. And to be frankly honest, regardless of what's going on with the political and geopolitical things in the world, the US dollar in the forex market, it's still the one that affects all the majors. Okay, let's put it that way. So yeah, they have similar setups. Ibola said, are you from Cyprus? Yes, I am. Hogan said, what are the best indicators to use on TradingView? Look, the best indicator to use is your knowledge about the markets, to be honest. If you want to validate some of your trading signals, you can use, if it's a trend, you can use the moving averages. But keep it simple. You can use a bunch of, because I create official analysis and I need to use many indicators actually to create the outcome. So I use the RSI, I use stochastic, commodity, channel index, I use on-balance volume, many indicators, MACD, some Bollinger Bands, depends on the occasion. But for trading, to keep your trading simple, you just need, if you're going to trade trends, it's easier to just put a couple of moving averages to help you not need to think, the market is in an uptrend or a downtrend. If the price is below the moving average, it's bearish. If the price is above the moving average, it's bullish. And then you have your setup. Okay, we don't trade the indicators. Don't get caught on that. We don't trade the indicators. I don't trade the moving average. I trade if the price is below the moving average and I want to go short, then it's validation. Please share the slides. Share slides. Asim said, I'm a bit late to join. I want to know BTC and XAU. I would really appreciate it. Thanks. We will go through. Clark, how are you doing? Hi, Theo. You explained it quite well. I myself battle to know what time frame to start off on and then to move to what lower time frame to achieve the trade. Many people seem to battle with as well. Guys, this is a common thing. Some traders, they start from the monthly chart, they go to the weekly chart, they go to the daily, they go to the 4 hour. Oh my God, I got tired only by thinking about this process. I used to do that. They go to the hourly time frame, then they go to the 15-minute time frame to take the entry, and then you end up doing that analysis paralysis. Okay, I went through, I understand you, and I will look, I can help you with that. Trading, it's accessible to everyone, but at the same time, you need some knowledge. Now, you can keep spending your effort and try to understand and try things there, or you can sit with some expert like other people, myself, other people, whoever you think it's better to interact with you, and just ask for some help, some guidance. Okay, now to tell you start from the monthly and go down to the hourly, maybe it's not going to help you, because let me share this with you. In trading, we trade our beliefs about trading. We don't trade the market. We trade what we think about the market. Guys, in trading, we trade what we think it's going to happen. We don't trade the market. We don't trade what it's going to happen because we don't know what's going to happen. We trade what we think it's going to happen. Some people, they think they come to private coaching, and I'm not going to go to pay their some money for private coaching to tell me what is a double bottom and what is a candlestick. And it's not the purpose of the coaching, this one. I just mention it because some people, they don't understand how some guidance they're going to help them. Each one of you have different personalities. I cannot teach to someone that it's hard for that person to accept the 1 minute chart, the fast pace, because I trade the 1 minute chart. It's impossible. The same way I cannot teach to some traders that they want to trade only 1 minute chart, how they're going to trade 1 hour time frame. The trading strategy, it comes down to who you define yourself as a trader, who you are in your nature. And I want you, and that's what I do with people, I help you to put trading next to your beliefs. I don't try to change you and to put you there in a trading strategy that you cannot execute because it doesn't make sense to you. Do you understand that? It's a personal thing, and the strategies I use, they are tailored to me, but maybe they are not tailored to every one of you. Maybe they're going to be tailored to some of you. Maybe we change them a little bit and we make them accordingly to who you define yourself as a trader. For example, I cannot go in the market and accept to trade with less than 2-to-1 reward to risk. Some traders, they want to take 0.5% and go out of the market because they are scared if they're going to end up in a losing trade. I can take 8 losing trades in a row and still take the next setup the way it's going to be there. There are people, they cannot do that. That's what defines me as trader. So that's why it's hard to tell you start from the monthly and go to the week and go to the hourly. But what, as a general rule, everyone can look the weekly and the hourly. Okay, and this is a good place to start. Let's check the gold because it has a kind of interesting setup. By the way, you're going to see a couple of bunch of lines here. Don't get scared because this chart, it went for to a prop firm. That's why I did the analysis here. Don't pay attention to all what you're going to see on the hourly time frame. Okay, just focus on what I'm going to tell you. The price on the weekly chart makes higher highs and higher lows the last 4 weeks. But last week, the market, and we are at all-time high, obviously. Last week, the market created an inside candle here, and that's a doji inside candle. It means the forces of supply and demand, it's kind of equal. Do you guys, and please answer this question, do you see how long are these bullish bodies compared to this one here? The fact that we see a lot of momentum building within these candles and we see very low momentum here, it means that the market paused, at least temporarily, and it's gonna expand either to the upside or to the downside from Monday onwards. Now, I often see traders make the mistake to trade emotionally rather than logically. Everyone can search on the internet and find out that a doji candle, it has this shape, and a doji candle means indecision in the market, right? If the doji candle means indecision in the market, and you all can find it and know it for sure, why from Monday some traders, they're gonna try on the hourly time frame, I'm not talking on the 5-minute time frame, it's totally different story, but on the hourly, on the 4-hour time frame, some traders, they're gonna try to go short. Why? It's because they believe that this is the top and the price is gonna reverse. They don't see that the momentum is building up to the upside, okay? And they are traders, they were trying to short here, short there, short there. I'm not saying it's wrong, because it's not wrong, it's what you believe that it's gonna happen in the market. But from the technical perspective, this market now, this market here, please don't pay attention to the lines, okay? Unless you understand what they mean. This market, it was in an uptrend. You see price makes higher highs and higher lows. And last week, it was kind of in a transition period. Now, do we know for sure that next week it's going to push lower? No, we don't know. When we're going to know that is when the price will break below these low points here. There are a couple of support areas around there, around there. There are weekly low support areas. But unless the price breaks below there, we can't assume that, hey, it's going to hit down. Of course, at some point, it's going to go down. And if it happens and you sell at the top, you're going to see your account rolling. And that's fantastic, okay? But we don't want to be in trading only for one thing and one trade. We want to do something consistency. And there is one thing that I teach to everyone, either on open webinars or on one-on-one coaching center. The way you're going to trade an account of $100, it has to be the same way you're going to trade an account given to you that it's $1 million. The exact same setups, the exact same implication, it has to be applied in both accounts, guys, okay? My purpose here is to turn everybody into a profitable and skillful trader, is not to just bombard you with market analysis and knowledge. Market analysis, it's simple. It's how to be consistent. Where is the difficulty? So from next week on the gold, we do expect that the price, it's clearly in a trading range here. It moves sideways. It's hard to understand if the price is going to come here and immediately it's going to break outside of that rectangle, or if it's going to come there and it's going to break below. We see that last week it was a little bit of battle between the supply and demand. So let the price break clearly below or above, and then we're going to trade either to the upside or to the downside. Now, if you're going to go on the 5-minute chart, like our traders, they send the signals on the group, and let's say they use the 5 minutes or the 15-minute chart to capitalize on the session's momentum, that's a different story, because they enter the market, they send the signal, and it's valid for only a short period of time to capture that momentum, okay? But if you're going to trade the hourly price action and all this stuff, you need to understand the forces behind these ones, okay? Let's check the Euro Australian dollar. This is an example of, is this one? Yes, it's this one. This is an example of how the weekly time, by the way, there are a lot of, this is one of the highest probability setups I believe we're going to see next week. Let me read some of other message. Scotch said, what exactly are you going to be looking on the pound US dollar to enter short? I will be looking for the price to continue making lower highs and lower lows. If the price now on the pound US dollar, the price is somewhere here, okay? I want to see the price to reach a little bit higher before I committed to go short. And then I want to see the strong price action reversal. Alessandro said, will you send the, Alessandro, I don't understand what later, what resume, sorry, I don't understand. Can you please write it again? Chikozi, how do you set the fib retracement? You start, if you want to go for short, you click it, you start from the high to the low, and by default, you're going to see this one here, and the numbers, they plot themselves. If you play around with it, you're going to find it. Hugo said, I take a coffee before going to bed. I'm from Portugal. Okay. Nice. Bokinga, do you offer physical training? What do you mean live? It's live. Unless you are in Cyprus, yes. Guys, if some of you are in Cyprus and you want physical training, absolutely, no problem. We want to do that. But if you are somewhere else, we're going to do it online. Alessandro said, I'm in a written, just having some starting point for tomorrow trades. Have you done gold analysis? Yes, we just did. Oscar, how are you? Which is the best time frame? Depends what type of trader you are. If you are free to trade during the London trading session or New York trading session, you can use 15 minutes, 5 minutes, 1 minute chart. But if you are also new to trading, it's better to start with hourly, 4-hour time frames, because they are a bit slower and gives you time to understand the market. Are you able to share the moving average, the 50 moving average, close name on TradingView, please? Here it's moving average, exponential moving average. Just type here moving average and you're going to see the exponential, and you just change the setting to 50. What about, Alessandro, what about ICT trading? What's your opinion? I'm just at the beginning of my journey, but it seems to me ICT is more useful than use indicators. ICT trading, it's the Dow theory that they rename it. For people, myself, like we know trading, it's nothing new. It's just the Wyckoff methodology, including with the Dow theory, and they kind of put together the lower highs and lower lows. They call them break of structure. The reversal, they call them break of character. The failure and non-failure bottom and top swings, they call them ice blocks, block ice, block breaks, something like this, blocker, something like this. But it's the non-failure and failure swing. These things, they exist ages ago. Now, you don't need to use the moving averages. Absolutely, you don't need to use any indicator in trading. You can simply use price action. If that works for you, absolutely fine. There is no right and wrong thing. Depends how you see trading, that it works best and it can serve you the most in the market. Okay. Clark said, thank you, Theo, for that explanation. I appreciate it. I now understand what you're trying to say. You have to adapt the strategies, yes, to who you are. Exactly. How long can you hold the signals? The signals our traders, they are sending on the channel group, it's they are sending directions there. You are very welcome, Scott. Will the signals be sent? I'm not the trader that sends signals on the group, guys, so I don't understand. Other signals, what are you talking about? How do the moving averages differ from EMAs, SMAs? It just weights differently the number of the periods. It's more mathematical in the formula, but for Forex market, it works best if we use the EMAs than the SMAs than the simple. Are you using RSI as well? Unless I'm asked, yes, I do use RSI when I need to conduct some analysis, or I like on the weekly time frame. For example, you see here we have bullish divergences. Price makes equal lows, RSI higher lows, it makes it more valid. Order block, absolutely. I do have also webinars, and I teach in my courses about order blocks. They are the engulfings, bullish engulfing, bearish engulfing, the highest probability order blocks. Okay, so I can teach you about that. That's not a problem. So back to the chart. Why the Euro Australian dollar is considered to be a good, let's say, setup next week, or a high probability setup? Because on the weekly chart, we have clarity. We see that the price is at a support level, and also we see the weekly price action that rejected the support here. So we expect it, and we see also fair value price created. In the ICT, you're going to see fair value gap. This is absolutely not right, because there is no gap created here. The gap is when there is a gap between the price. So this is the fair value price, not the fair value gap. Okay, so there is a fair value price created within this candle because of the imbalance of buy and sell orders they entered 2 weeks ago, and it's unmitigated. So we do expect that it's going to mitigate it at some point. Therefore, on the weekly chart, we have clarity, price action reversal, and bounce from the support. If we go down to the hourly time frame, we want to look for buying opportunities. So the price on the to look for buying opportunities, we need to see the market makes higher highs and higher lows, break of structure, change of character, or simple higher highs and higher lows. So the price came from this accumulation. If you put any RSI, stochastic MACD, you're going to see bullish divergences. But the most important thing is that the price, this low point here and this high, has been taken out, and it made this formation of higher highs and higher lows. Now, this one here, they call it on the ICT as a icebreaker, block breaker. If someone of you know better, you can let me know. But it's what it's written the last 200 years on the books as a non-failure and failure swing bottom. So it's just it's obvious. Okay. And the price, anyhow, it's in an uptrend on this time frame. It makes higher highs and higher lows. So I would like to look for long opportunities here. Simple as that. Now, if the price, we need to know how to read the trend. If the price breaks below a point of support, then our analysis is invalid. We cannot keep looking for long positions if the market structure changes on the hourly time frame, if we trade the hourly chart. Okay, does it make sense? I challenge you to see trading from a logical perspective. Trading is a logical thing. It's not something. The only difficult thing is to put trading next to your existing, let's say, belief, next to your personality. And as I said earlier, we don't trade the market. We trade what we believe it's going to happen in the market. If we trade what we believe it's going to happen in the market, it means we create a kind of ideal scenario of where the market is going to move. And the most important thing to make money in trading, ladies and gentlemen, is to understand the reward to risk ratio. If you don't know reward to risk ratio, even if you are the most brilliant analyst, even if you know the ICT or the Dow theory upside down, if you know Elliott waves or any methodology, if you have the best trading system in the world, if you don't understand the reward to risk, how it's going to implement in your trading and to put it there, I guarantee you're gonna find it hard to make money in trading. And that's what's the most important thing I would like you to learn. It's reward to risk ratio. Okay. Alessandro said, can you explain the difference between fair value gap and fair value price? I didn't know this one. What is a fair value price? The fair value, this one, guys, I know that, look, I'm not a YouTuber. That's why I don't expect you to find what I teach on the YouTube, okay? But for example, those who know this, you call it a fair value gap, okay? If this is a fair value gap, it means the price made a gap. The gap, it's something we see visual on the chart. This is, the price didn't make any gap here because the gap simply means there are, the orders didn't get filled and the market moved because the market moved and some orders didn't get filled and they are sitting there. But in this case, if you take the anatomy of this candle and you put it on the NinjaTrader platform Sierra chart, you're going to see that there is buy and sell orders on each price level on this candle, which means they were orders executed from the open to the closing price. There is no gap left in this candle. What happened here is that the price somewhere in the middle towards the top has the majority of the orders. That's why we call it a fair value price. That's why we call this area here the area that it's kind of an unfair value because of the explosive, and we just give it the name of the fair value price. What is a fair value gap? Let me show you here. So a gap is this thing here in the market. A gap is created when the imbalance of buy and sell orders is so significant that the market from here, it didn't fill these orders there and it jumped to a higher price level and it left a gap. And the gaps, all the gaps, the gaps, they have three names. There is the breakaway gap, like this one here, which we find it after accumulation. There is the runaway gap. We find it somewhere in the middle. The same gap, we find it in the middle of the move. And there is the exhaustion gap, okay, which we find it at the end of the move. And this is the sign that the market is going to reverse. Anything else that it doesn't print empty space in the chart, there is no price gap there. The fact that the market didn't kind of respect all the traders' order, it didn't respect, let's say, equally the buy and sell orders, and it created this imbalance. It didn't left any gap in the price orders. They got filled in the market. That's why there is no gap here. It's just let's say a difference of the value of the price. That's the, guys, that's the reality now. And again, I don't expect you to accept everything I say. When you hear or you learn something from someone, including myself, I challenge you to question it. You don't need to accept everything. I mean, just question it. Go investigate if you want. If you find it hard to, okay, Theo told me this one. I watched a video from a guy that has 1.2 million subscribers on YouTube, and he said this one. So who understand who is saying the truth or not? Both they say the truth. With whom I resonate most? You make your homework and you find out how you can resonate better with the information. Okay, guys. You are very welcome, Alessandro. I hope that's clear. Tayara said, joining late, I missed a lot. Oh, okay. So for those that they joined late, I will let you know before we wrap the webinar for tonight. Guys, do you want to see any other currency pair? Just very quickly, the Japanese yen yesterday, let me just go through for another 2-3 minutes. Last week, we said about the Japanese yen, they all had a reversal price action. They are all in this kind of downtrend. Alessandro, don't put me on the Mexican peso. Oh my God. The price made reversal price action here all the Japanese yen, actually, they had reversal price action. And we were forecasting to go short on the Aussie yen, on the New Zealand yen, on the Swiss yen, everywhere. But the price apparently created directional move. So it happened. So our biases weren't like they didn't play out. But the good thing is that we knew what we wanted to do. Let's say last week we were looking to go short on the Japanese yen. So how do we go short? The market made lower high and lower low, but here it failed to make a new low and it made a higher high. So from this point here, the market starts saying, I'm not going short, I'm going long here. And it didn't give us what we were expecting, to be honest, to trade. So we just change our biases. We go with the flow. We don't need to say, okay, we see that there is a short opportunity and that's going to be unchanged. No, we have to also see what's going on in the market. But the only way to see and understand is when we have clarity. So the US oil, that was a strong level of support, as you can see down there, from 2013. I think it was March 2023. And the price found support around 66. It bounced off, bullish engulfing price action. After this bullish engulfing, I'm expecting to see some long position, some long bullish momentum. Price now makes higher highs and higher lows. And if the price is, you see, I have it here as a fair value price. Then we have a bullish engulfing order block here for those that trade smart money concept. So if the price is going to dip down, I'm waiting for these areas to be touched, of course, by the price and to look to go long. But it's more long than short based on the weekly chart here. All right. Guys, for those they joined late, allow me to tell you that because yesterday it was my birthday and I decided to do a giveaway and give all my coaching sessions for 1 hour. Each coaching sessions only $50. If you want to get the discount code, you can apply them on my website. You can send me a message and I will send you the website if you are interested. If you are not interested, that's not a problem. I want to see you again next Sunday here with more market updates, with more market analysis. I want you to let me know if you apply some of the strategies we teach here and how do you progress with your trading. I'm here for you. I want to see you succeed in trading. And yeah, I wish you the very best. Happy trading. And I will see you all next Sunday. Okay, take care and have a lovely week ahead. Thank you, everyone.